Welcome to it. Time to have a look at the markets picture. Of course, the big news of the week was the Fed announcement. They obviously announcing that nothing new has pretty much changed. Of course, it has created some kind of uncertainty when it comes to where the inflation rate might be. But when you look at the Asian markets picture, that mostly mirrored some of the investor sentiment that we did see. Of course, that overnight sell-off coming from the United States. The Nikkei in Japan, that was down about 1.4%. That's on the back of the Japanese central bank, indicating that they're willing to basically widen the range at which the 10-year Japanese government bond yield can fluctuate, that between the target point and plus minus 0.25%. Over on the other side, looking at Hong Kong, the Hang Seng Index falling about 1.7% in late afternoon trade. The Chinese mainland shares also showing that kind of picture as well. Looking at what's happening over in the US, of course, I did mention that we did see a little bit of negativity as the Wall Street market struggled overnight, and that had impacted the tech shares as well as the Dow Jones and the S&P 500. But the futures picture looks a little bit more positive. That's pointing to a slight rebound as the yields that we've been talking about over the past week seem to be reversing some of their gains. Looking at the European picture as it stands right now, markets pulling back, of course, mirroring what is happening on the Asian front. We did have the Bank of England opting to rather keep their interest rates and its bond buying program unchanged. The individual indices, well, they tell a different story. The German DAX down 0.4%. Yesterday, it was the star performer in the region, of course, reaching a record high in early trade. The French CAC down 0.3%, and the FTSE 100 as well in negative territory, down 0.6%. The JSE picture, well, that's looking a little bit weaker. Of course, again, as I mentioned, investors taking in some of that cautious sentiment. But to get a picture and a full view as to what happened on the markets thus far, we are joined by Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time.
Only a pleasure.
So, I mean, I gave a rough picture of what is happening on the JSE right now, but let's look back at the week that was for the JSE.
Well, it's certainly been a tough week for the JSE and indeed most markets. We've kept a close eye on what's happening on that US bond market, and generally the US bond market has been seeing the rates on long bonds creeping steadily higher, and it's a theme that's been persisting for a few months, and quite a lot of focus on the Fed. It's had a particularly long meeting this week, a two-day long session before coming out with the indications that they're going to continue to be supportive of the US economy, and I think that's perhaps seen us coming through with a little bit of relief at the end here. Those US futures, as you pointed out, looking like they're pointing higher, but also I think part of the pressure that we've seen on the South African market has also been that slightly stronger rand, and I think that's really just a flip side of the US dollar looking a little bit soggier. So all in all, a tricky but not disastrous week.
All right, so when it comes to the US 10-year, I mean, how worried should we be?
Well, not particularly, I don't think. I believe that the Fed, for its part, continues to see the whole economic equation as being almost one of restarting as opposed to just recovery. I mean, after all, the damage is really quite extensive in many countries around the world, and there's a sense it's not just a typical bounce, but there's a little bit of shepherding needed to get economies working properly. So the Fed, for their part, in commenting that they really don't see much prospect of rates going higher until about 2024, indicating that they think there's quite a lot of powerful deflationary forces out there, forces that are weighing against the economy. So weak growth, the impact of technology against inflation, demographic effects, i.e. aging populations, and all of this leading to effects that are leaning hard against economic growth to some degree, and the Fed looking to offset that with monetary policy, and obviously then we've seen the US government weighing in with some very large fiscal stimulus as well.
Bring it back locally. We've had the big four banks publish their numbers. What did you make of it in light of the pandemic?
I think all in all, there's not really too many surprises there. I think the banks, for their part, where they've been able to, have given some quite reasonable guidance. I think the biggest concern for the banks, obviously in the early days, was would they be able to withstand the COVID shock, and it was good that the SAB stood behind them all and made sure that any systemic risk to banks was dealt with, and we've moved thoroughly on beyond that. The banks have managed their potential credit risks pretty well. We knew obviously that bad debts were going to go higher with all of them, and that's exactly what transpired. They did go higher, but it hasn't gone completely out of control. Obviously, it's going to be a bit of an overhang on our banks for quite some time to come, and they are going to have to manage their way out of a situation where a lot of people have lost their jobs, a lot of economic growth has disappeared and needs to recover, and this is a process that's going to unravel itself over quite some time.
Looking at next week, are there key events that you'll be keeping an eye on?
All right, and in the local economic front, there's basically dribs and drabs from Stats SA. But the big one that I'll be keeping on, and I think most of South Africa will be interested to see what happens, is that the MPC is going to be meeting next week, and we'll hear what they have to say about our interest rates locally. Obviously, consumers will be hoping for a cut. I'm not sure that we necessarily will see a cut, but pretty much our inflation's not really putting in too much of a run at the moment. So I guess the SAB is going to do steady as she goes.
Before I let you go, Warwick, I mean, given what you do, is there something that concerns you given some of the stats that you look at on a daily basis?
Well, look, I think the main thing that we want to see as South Africans is that the likes of Operation Vulindlela, which is the broad economic recovery plan and modifications in policy, that they are persisted with, that they are well communicated to the public and bought into by the ruling party. These are necessary changes. I think it's very good that government has been communicating much better in recent times about these developments, and they actually are treating their progress reports seriously. I am a little saddened to see that the cap on generation was not lifted as much as one would have liked to see, but nevertheless, It was lifted. That's an improvement, and it should be cheered.
All right, Warwick, thank you so much for your time this afternoon. Of course, that is Warwick Lucas from Galileo Capital talking to us about what is happening on the markets picture.